Welcome to the Bigger Cash Flow podcast, where we interview business owners and real estate investors that share tips and tricks on how to grow your cash flow and reach financial freedom.
Welcome, everybody. This is Bo Kim with the Bigger Cash Flow podcast, joined by my co-host, Joe Kim. What's up, Joe?
Hey, Bo. How's it going?
Today's episode, it's a two-part episode, and how we use real estate to create bigger cash flow, right? So last week, we dove into the importance of mindset and the role that it plays in the achievement of our goals and overall success. So we talked about how to handle setbacks. You're going to run into roadblocks, how to maintain a growth mindset, not a fixed mindset. And so if you didn't have a chance to listen to that episode, be sure to check it out, episode number 3, and send Joe and I your thoughts and any questions and comments on how having a growth mindset has helped you in your business and achieving your goals. With that said, I want to share this quick quote of the day with you below, and it comes from Chad Carson, author of Retire Early with Real Estate. And Chad says, real estate gives you the ability to control and affect the outcome of your financial independent plans. Many other assets leave control in the hands of others. What are your thoughts on this, Joe?
I totally agree with that. Based on personal experience, I definitely have experience investing where the investment itself, or I don't have proper control over the investment. And it essentially turns out to be gambling. So investing without control is the same thing as just letting chance do its thing. And I think that's why real estate cash flow is so amazing, because you have that control. You can fix problems when they occur. If you have a bad tenant, you can get a new tenant. If you have a property that's under cash flowing, you can improve the property, raise rents. So that kind of control is a fantastic thing. On the other hand, for example, one of my favorite stocks, I love the stock, but you have no control over the CEO. Whether the CEO is rambling on Twitter, has a negative effect on the stock, or there's some disruptive technology that comes along that totally changes the way that the industry works, and therefore that company is no longer relevant. You have no control over those things. And so with stocks, it is very difficult to kind of stay the course sometimes, because you see things happening that's not under your control. And so, I definitely feel like real estate has a huge advantage over certain investment type assets like stocks or gold. So yeah, I'm really excited about how real estate is something that you can, grab onto and just grow with your own, hard work and effort.
Yeah. No, and I also like this quote because, time and time again, I hear other real estate investors say that the reason why they want to take money out of Wall Street and put it into Main Street is that, the buck stops with them. So instead of paying their asset managers and portfolio fees to people whom they basically have no relationship with, no FaceTime with, real estate allows you to take control, analyze the asset, get to know the neighborhood and where you're really investing in, right? So I think, being able to direct where the ship is going is a huge advantage over some of these other asset classes.
Yeah, absolutely. Absolutely.
Yeah. So let's kind of dive into, why real estate. Joe, maybe you can kind of speak to a couple points and advantages that real estate holds over other asset classes and just in general.
Yeah, sure. So why real estate? One of the things that you can look at is the historical track record,
Mm-hmm.
and you can see how real estate as an investment has grown and is a proven asset class. However, when you Google it, so you will see that there's a lot of differing opinions, and some people will say stocks are better when you add, inflation and all the other things that maybe real estate is not as good as some of the other asset classes. But I think that you have to really understand real estate as a local market. It's not some average that you can look at, because nobody invests in 50 different states all at once. People invest in Podunk, Washington, or Dublin, California, or wherever you're investing in, Kansas City. And not just in Kansas City, but a specific neighborhood in Kansas City. So it's very specific. And so you can't really look at averages to kind of use that as a way to debunk real estate as a proven asset class. One of the things that I love about real estate is it's a tangible, hard asset. You can live in it, you can feel it, you can see it, you can smell it, you can put your hands on it. And so I think that is very important, because it's a hard asset that has value in of itself, right? The land, the wood, the technology that's in the house. So that's absolutely a huge plus. And so, you've seen stocks, we've all seen stocks drop 50% in value or 20% in value in matter of not even in a day, in matter of like minutes or hours. But a house, unless it burns down, the value is not going to go to zero. And in fact, even if it does burn down, you have insurance that's going to actually then reimburse you for the value of the home. So in that way, I think that hard asset is such an important part of real estate that is very different from things like stocks. The other thing is limited quantity, supply and demand. Now, again, you can control that. You can go to areas where there is a limited supply or high demand, or you can go to an area that's up and coming or gentrifying. So I think that's the other aspect of control that you can apply into that market, and finding that right market with the right research and right networking and connections. So I love that part of real estate. And then this is my favorite, control, right? So, having control not only is helpful for your bottom line, but it's helpful for your psyche, right? I mean, if you don't have control over your life, over your investment, the stress and the amount of just unhappiness you have is really more than you should have to bear. And I really love that about real estate, is that even if you get knocked down, you have another opportunity to make it better. Whether it's you change you have a bad tenant, well, you can get a better tenant next time. You can do better tenant screening. And I definitely have a lot of experience with that, especially recently. So everything that you do, every mistake you make is another chance for you to grow for that next deal, to do it better. And lastly, passive income. So this is really very unique to real estate, in the fact that you can do this passively. You can do it while you're working a full-time job. Both Bo and I, we're both working pretty hard. I think more than 40 hours a week each week, and yet we're able to do real estate on the side, which is fantastic. And then the passive income part of it, the income in real estate is just fantastic, because nowhere else can you get the tax benefits, the depreciation benefits, the appreciation benefits, the loan pay down, the increasing in equity. Every time your tenant pays your rent, they're paying your mortgage, and that mortgage is paying and adding equity to your home, to your bottom line. So I love that about real estate. I love that when you make the income on real estate, you don't pay any taxes on it. Where can you get that? And especially if you're a high W-2 income earner, you understand that pain of the taxes you got to pay. So that's one of my also favorite part of real estate investing.
Yeah, Joe, thank you for that. And just to clarify, when you say you're not paying any taxes, you're talking about strategizing to, take depreciation loss and other ways. On paper, you'll have a loss, but in actual income, you're still making cash flow. Is that correct?
Yeah, exactly. So there's money coming into your pocket, but that money that you keep, you don't get taxed on because of all the paper losses, which one of the largest one is the depreciation loss. but all the other little expenses that go into real estate also help add to that, lowering your tax burden. But really, I think with that depreciation loss each year, you end up basically having tax-free income on
Mhm.
anything you make on real estate.
Yeah, and Joe, myself, and many other investors believe that with real estate investing, the government is truly on your side. Because if you really think about it, there is an innate need and demand for housing. The need for shelter isn't going away. The government kind of incentivizes landlords by giving them a lot of tax breaks. Last year, Trump came out with the Tax Cuts and Jobs Act, and there was many benefits not only for buy and hold but for flippers, apartment syndicators, and a lot of real estate investors got to reap the fruits of this new tax break. So I think that's a huge benefit. And
Yeah.
also going back to control, there's many things that you can do to kind of stay ahead of the curve and also kind of mitigate risk. So i I want to quickly share that during the day, my W-2 job, I work as an accountant, and 80% of my time, my focus is in Sarbanes-Oxley compliance, so working with public companies, making sure that they're compliant with SEC rules and regulations. And basically, why the SOX 404 Act was created was the Enron scandal. They were cooking the books and showing these, enormous gains and things on the balance sheet and financial statements that weren't true. They were defrauding investors, and basically, this regulation came to be to protect the interests of the investors. And with that said, it really goes to show that when I invest in Apple or Facebook or Tesla, I'm really kind of putting my trust in them to, show me that their pro formas, their balance sheet, income statement is actually accurate. And I'm trusting that the third party auditors are kind of doing their due diligence and telling me what the real numbers are. But when it comes to real estate, you can have brokers and turnkey providers or whatnot send you their pro forma. But as a real estate investor, you can normalize expenses. You can call property managers to get what market rates are. You could go to Neighborhood Scout. You could go to Rentometer. There's so many things that you can do to keep that control, mitigate the risk. And I don't want to go too off into tangent because we're going to cover it below, but these are just some of the benefits that Joe obviously hit on in terms of, his stock, the CEO going on Twitter and, maybe the stock price plunges. You have no control over that. So these are many of the benefits of you being in the driver's seat.
Yeah, absolutely. Totally agree.
Yeah. So let's kind of talk about types of real estate investing. There's many, many different types of real estate investing, but for the sake of time, we've kind of narrowed it down to about 9 or 8. But Joe, can you kind of go down the list and maybe you and I can kind of talk about our experience with each of these types of investing, what may have worked for you and why you may have decided to pass on any of these?
Yeah, sure. So the first one is renting out your home, aka house hacking. And I didn't even realize until recently that I actually did this. So in 2009, I had a new job, and that was in like the worst part of the recession, right? That was in the heart of the recession. I was underwater, just like pretty much everyone who bought homes in the last, 2, 3 years before the recession hit. So I basically couldn't sell my house. So I rented my house, and I think I was making maybe $100 above my pity, and maybe breaking even on some months. So, but at least I didn't foreclose. I was able to make it happen. This was a house in Orange County,
Mm-hmm.
so it was not one of those cash flowing type properties. So I did that for 5 years while I was living away. But what was fantastic about that, even though it wasn't your traditional investment vehicle and I wasn't cash flowing very much, the tenant had paid down my mortgage, my principal, at $1,000 a month.
Wow.
And looking back, and I was like, wow, so that $1,000 of equity that they paid for me, not the interest, I'm talking about the actual principal that they paid down, was $1,000 of principal they put in my pocket every month. So when I sold the property 10 years after I had bought it, I didn't actually sell it for a profit on paper in terms of like what was my original purchase price and what was my set sale price, but I still had all this equity pay down that I got back. So that was fantastic to see how even in the bad situation, even if you don't sell your house for a profit, I still made money on that first house hacking, accidental landlording that I ended up doing. Yeah.
Yeah. No, that's awesome. I
Yeah.
mean, I actually did this with my primary residence, and this is how I actually started real estate investing. I didn't know it was called house hacking at the time, but some people do it with a duplex or a fourplex. Others get roommates because they have, separate rooms and bathrooms and whatnot. My primary residence, I had, a 3-bedroom, 3-bath home. So it was perfect. Everybody got their own private bathroom. Rents for a single bedroom was anywhere from 6 to 800 in my area. So I rented it out for about 750. And it reduced my mortgage to almost at levels I was paying when I was renting a 2-bedroom apartment. So I was like, hey, this is a no-brainer. And that really got me thinking about cash flow, passive income, and
Mhm.
that naturally transitioned into my first rental property. But, for those of you who are college students may already be doing this, right? Getting extra roommates to help pay for the bills just because you guys are cash strapped. Or, Airbnb has made this a little bit more mainstream, renting out a part of your room or the whole house. This is a great way for you to just get started, build up some cash flow, and also just figure out if this is something that you want to do, right? This might totally not be what you want to do. You don't want to deal with tenants. You don't want to deal with, the things that come with being a landlord. So this is a great way to bootstrap it and not tie yourself to any big old contract or whatever. So I think this is a great way to start.
Yeah, no, I think so too. Totally agree. You got to do what you got to do. You
Right.
can't just sit on your butt, and say I can't do anything.
Right.
You always have something that you can do. Yeah.
Yeah.
Yeah. The next one is wholesaling.
Okay.
Um, and that's a more active type of investing. So, Bo, do you have any experience with wholesaling?
No, I don't. But when I was first getting started, after I did my house hacking for about 7 months, so I actually went to about 4 of these 2-hour sessions that they do on the weekends, where they kind of walk you down what is wholesaling, how you make money from wholesaling, bird dogging, or assignment of contracts, driving for dollars, all that stuff. And I really thought about it. It's a lot of active work, and I wanted to be more passive. I'm sure you felt the same way with your demanding W-2 job. So I looked into it, but I naturally ended up working with wholesalers as part of my team, but I didn't become a wholesaler.
Yeah, no, I feel the same way. I think it's a good way for people who have lots of time on their hands. But for people who have, regular W-2 jobs, it is difficult to kind of squeeze that into your time. Now, I did try to do driving for dollars, and I try to kind of like not house hack, but drive hack, like on the way to work or on the way home from work. I would go like to a random neighborhood next to where I work, which is a pretty decent wholesaling market, which is Vallejo, California. And so, but I just, thought to myself, one, I'm terrible with directions. So I would get lost constantly, even with GPS. So
Mhm.
that I know that wouldn't work for me. And even with driving for dollars, I think you have to have a very good sense of the neighborhood and
Mhm.
understand your market really well. And that takes a long time. Either you have to live there for a long time or know the different neighborhoods well enough to be able to do it properly. So yeah, definitely takes a lot more time and involvement, but certainly it's a great way to get started, even if you have very little experience and very, very little money.
Yeah, if I may, just add to that, when I was first starting out, Brandon Turner from Bigger Pockets, he said something that really resonated with me, which was, to be successful in real estate, you need just two of three things, which is time or hustle, knowledge, and money. So if that's the triangle, you just need two or three. So if you have the time and knowledge, or at least growing your knowledge base by reading books, listening to audiobooks, going to webinars, you need to find a money partner, obviously, and then vice versa. If you have the money and you have the knowledge, then you need to find a partner who has the hustle. So I would say wholesaling kind of fits under the hustle and knowledge category. So
Hmm.
if you don't have a ton of money to buy rental properties and put 20-25% down, or whatever you want to be doing, flipping properties or whatnot, wholesaling kind of gives you the ability, at least if you do it correctly, to come out with deals with no money out of pocket and make some money at closing. But you do have to be careful. Each state has their own rules and regulations. Some it gets murky if you're a real estate agent, because it might be considered you're acting as a broker, right? You're brokering a deal. So you definitely want to do your research in your local market of how this is handled, and make sure that you're protected.
Yeah. And actually, I think it's probably easier to wholesale as not an agent, as somebody
Right.
who's not, licensed. You have less restrictions.
Yeah.
So the next one is flipping. So that is basically buying a property at a discount, whether it's a foreclosure or auction sale, and then improving on the house and then reselling the house for profit. So, what about flipping, Bo?
Yeah. HGTV has made this really popular, right?
Yeah, right,
Yeah.
absolutely. Yeah.
Don't they give always like all the correct numbers, making $60,000-$70,000 profit on flips and things like that?
Oh yeah. Right. Yeah,
um,
absolutely. Yeah,
and they
it
don't,
definitely makes it look sexy to pick up a hammer and start, ripping down walls and drywall and all that good stuff.
right.
Funny
And
though, I would go homeless if I had to flip myself because the other day, this weekend, I tried to fix my toilet, and instead of changing out the little $5 piece flapper, I
mhm,
actually broke a $50 piece of the toilet. And so
nice.
instead of like spending $5, I ended up having to spend $50. And at the end of the day, the amount of time I spent in trying to fix my toilet, I probably would have saved more money if I just hired a plumber at
Yeah,
$125, $150 an hour.
yeah.
Yeah,
That's why we're not out there swinging hammers, right,
that's
Joe?
right. Yep, yep,
I,
definitely.
And going back to like the numbers, it's so funny. It boggles my mind when I see these shows, show, hey, purchase price of $100,000, $50,000 of rehab, sold it for 200, and we're gonna make 50. Okay,
Hmm.
so where's closing costs? Where's commissions?
Yeah,
Where's holding costs? Because most of the flippers that I know, they're either using private money or some sort of loan, line of credit or hard money loans. So there is holding costs, right? Utilities and all that. So, when you're watching these HGTV shows, make sure, you do your homework. Is not as straightforward as that. It's not as clean as that, but you can still definitely make monies, especially depending where in the market cycle your local market is. So,
yeah,
obviously, if it's in a downturn, you don't want to be flipping because home prices are going down and it might not appraise, or you're not going to be able to sell. But if it's on an upward track, it's like the best time to do burrs and flips because you're going to get these high comps and you're going to be able to sell much higher than you normally would have under different market cycles.
next one is commercial businesses, and apartments and syndications.
Mhm.
So can you talk a little bit about that, Bo?
There's the residential side. There's also the commercial side, whether it be the apartment buildings. So commercial, anything over 5 units is deemed commercial. And also, office buildings, mixed use, things like that. Those are considered commercial. And there's also a lot of investors or institutional money that kind of chases these types of real estate investing. So typically you'll see a majority of investors invest in the residential side, the 1 to 4 units, under conventional Fannie Mae loans. But there's also a lot of money to be made. Some people even which we'll get to in a minute, apartments. And it's
Hmm.
like just 10xing what you would do for a single family home, right? So
Yeah.
there's different things out there.
Yeah, I was just saying that I think commercial apartments, that kind of stuff is really sexy. And a lot of people think that that's something that we should all strive to get to.
Yeah.
Eventually, you start with your single family home. Certainly, I actually have a neighbor. He is a investor in commercial strip malls, and I think he has about 10 of them in the Bay Area. So, very well-to-do guy. And he was telling me this deal that he did during the recession. So he bought something in like 2010 or 2011 for $3 million. But he said once it's completely occupied, it'd be worth $16 million.
Wow.
The one strip mall, right?
Yeah.
Now, what the funny thing is, he's telling me this like 6 years after, right? He bought this property, and so I'm thinking, oh my gosh, you just made, what is that? $13 million, right? 16 minus three. Then I asked him, so are you fully occupied? And he's like, no, not yet. So even after 6 years, right, he couldn't completely fill and get tenanted on all of his units. And therefore, it's not worth $16 million. It might be worth, I don't know, 6 million, or 5 million. So it certainly is not that easy, or, you hear a lot of the great stories, but certainly I think that's an area that's very competitive, like you said, with a lot of big money and a lot of investors that actually make it so competitive that the cap rates are so low. As an investor, I think it's a difficult market to break into during a hot market.
Yeah. And also, just to speak on that, and for the benefit of our listeners, with these commercial real estate, the purchase price or the market value of these properties are based on their net operating income and the cap rate of that certain area. So, what Joe is referring to is that if it has a lower occupancy, the purchase price that his neighbor got it for might be, way undervalued had he bought it if it was much higher occupancy. So if you increase the occupancy, like for these commercial strip malls, if you get, kind of like the anchor tenants, if you get like a Walgreens in there or a Ralph's or these big names, if you get Starbucks, things like that, then they're going to be in there for a long time and your NOI is going to be stable and you're going to have a high market value where you can just stabilize the property and resell it for $16 million in this case. But it's definitely easier said than done. But it's a great way to really maximize and force appreciation. Where are you going to, force $13 million on a 1 to 4 unit? I don't know if you can even do that in, San Francisco, maybe, maybe in San Francisco, I don't know. But, in many parts of this country, if you want to really go big like that in terms of number wise, you do have to scale up and go commercial. But yeah, that's a different strategy. Like Joe said, it's more advanced and there's a lot of sophisticated institutional money following. So you definitely need to do your homework.
Next one is buy and hold rental properties, which is near and dear to our hearts, to both of us. That includes things like the BRRRR, turnkey, different ways to do buy and hold. So I can talk a little bit. My very first property or real investment, besides the accidental landlord thing that I did with my own personal home, was a turnkey property in Texas in 2013 in Houston. And that was certainly a really good way for me to get into investing in real estate, because, the way turnkey works is that somebody else does most of the work for you. So somebody else finds a discounted, foreclosed home, and then they basically rehab it and then put a tenant in, and then they ask an investor to go buy the home. Now, sometimes that the tenant in place is done after it's been rehabbed, but basically you as the investor are putting up money to buy the home, but everything else, all the work is done for you by the turnkey provider, who then also becomes the property manager for your property. So I think this is a very popular way for a lot of us who are W-2 income investors to get started, and especially those of us who live in California, where you really have a hard time finding cash flowing properties near where we live. So this is also called the out-of-state turkey investing that a lot of people are doing, and that's definitely how I got started. How about you, Bo?
Yeah, so I'm also in the buy and hold space. I started with turnkey properties, about 3 of them, and then since then created my own team and kind of transitioned into the BRRRR method, and I've picked up a couple more. And I just love buy and hold real estate because, flipping is another strategy that I might get into later to create the capital. But the only reason why I would flip any properties is to get the capital and buy more buy and hold rental properties.
Right.
So it's just a means to an end in terms of flipping. But for me, my ultimate goal is to build a buy and hold rental portfolio that will supplement and replace my income. Then I will have, the financial freedom to choose and live the life that I want to. So that's my purpose. And I think buy and hold, which we're going to dive into a little bit deeper in part 2 of this episode, it has so many different types of advantages that we'll cover a little bit more later.
Perfect. Yeah. Next one is REITs. REIT.
Yeah. So REIT, or Real Estate Investment Trust, is basically a company that owns and operates income-producing real estate, and it could come in the different forms. REIT might have a strategy on senior housing. That might be a strategy. They might just do A-class apartments. They might just do commercial real estate in downtown. They might do expensive condos and lofts in downtown. There's different REITs. Nowadays, there are a little bit more popular crowdfunding REITs. You guys may have heard of Fundrise or Realty Shares. Those type of crowdfunding REITs allows non-accredited investors to invest into a REIT so that they can be part of a group of investors who invest in apartments and commercial real estate.
Yeah, and that's a great, purely passive way to get into real estate. The next one is private or hard money lending and notes.
Mm-hmm.
Do you want to talk about that, Bo?
Sure. Private or hard money lending. So there's 2 ways, right? You can be the recipient of private or hard money lending. So in my case, as I'm growing out my portfolio and I'm trying to do these BRRRRs, buy, rehab, rent, refinance, and repeat, I'm going to need some capital to buy these distressed properties that the banks won't finance, and also, pay contractors to rehab the property and pay closing costs to refinance the property. So there is a little bit of capital needed to do this. So, I tap into my network to get some private money or hard money lending. And basically, if you're on the other side of the table and you do not want to deal with every day of being a landlord, dealing with the acquisition, contractors, and things like that, there's some active pieces to this, right? So maybe you just want to underwrite a deal and just loan a flipper $100,000 at 8% interest. Or in hard monies, I've seen terms anywhere from 10 to 14% with 1 to 4 points. So a point is a percentage of the loan balance. So there's different ways to make money. So you can also be the lender and not deal with the day-to-day operations and still make a good return through real estate.
Yeah, no, I definitely like this part of investing. And so I've done it a few times as the actual private lender. Yeah, I think it's a great way to kind of do it passively without, having to do any of the hard work
Yeah.
and still make a good return. So I think, yeah, so that's certainly something that I think you can always do on the side if you have the capital to lend out.
What I've seen through going to these real estate meetups and conferences is kind of a evolution of the investor. Um, Typically, I see people starting out with, a house hack or a turnkey property, and then they go into BRRRRs, a little bit more active, or flips, or short-term rentals like Airbnbs and things like that. So they're a little bit more hands-on, and then they transition. Eventually, they want to be the bank, because if you really think about it, and I'd love to do an episode on being the bank, the banker's code, and all that stuff, is because ultimately what we want is passive income, right? To replace or supplement our, active income. And if you think about it, the banks are kind of the ultimate key holders into this whole financial system. And they're making a good return on their money. And the way that fractional reserves work in the current banking system, you put $10 into the bank and they can lend out 100. So and they make another return on that 100, not just the $10 that you put in it. So it exponentially multiplies the bank's return. So if you understand the velocity of money and how the banking system works, which we can definitely cover in another episode, you kind of hold the key to your financial future. And that's why I see a lot of sophisticated investors transition from all this active work to later on in their years becoming the bank. And that's personally where I want to be eventually. And I think there's definitely a lot of merits to doing all of that.
Yeah, definitely. The last one is short-term rentals, my favorite. Airbnb, vacation homes, VRBO. I could talk a little bit about this.
Yes.
Yeah, this is something that I've transitioned into from my traditional buy and hold. And it's funny because one of my complaints with buy and hold was that it's supposed to be passive,
Mm-hmm.
but I felt like I was much more active um, in managing them, even though I had property managers. And I think that was a psychological thing for me because it wasn't like I was actually spending that much time. But every time I got a notification from my property manager, it was some bad news. It was like, oh no, don't tell me now there's another, expense. There's a problem with the tenant, an eviction problem. So every time I would get some kind of news, no news was good news for me because, then you're just getting your money and everything's fine. So I think that was frustrating for me on the buy and hold traditional rental side. So with Airbnb, it's funny, it's way more active, but this is the thing that I talked about before. You have way more control, I feel like, because now I'm actually getting tenants that I screen immediely, and the quality of the tenants or the guests that we call them are much higher. They're not the type of people that you're going to have to evict. Now they may leave a little mess here and there, but again, you have a cleaner that come in and clean that mess up. So there are certainly issues and problems with short-term rentals as well. But the other thing that excites me is the 10xing type of cash flow that you can get from short-term rentals. And I see it as sort of like this forced cash flow. It's just like the forced appreciation where you add value to a investment by improving the building or adding some bedrooms, that kind of thing. And by adding furniture and marketing it on platforms like Airbnb or VRBO, you can rent it out on a per night basis, and the revenue is just tremendous compared to a regular rental. So no, I'm definitely enjoying this thing with Airbnb, but certainly it's like everything else. There's always challenges and always things you have to deal with, but I'm definitely enjoying it a lot, and I think everyone should do it. including you, Bo.
Yeah, I know. It's funny you mentioned that, because the 2 duplexes that I just picked up, 2 of the units are vacant. This trip I went to KC, I purposely hit up 3 people that I knew were doing Airbnb, because I wanted to pick their brain, because I'm definitely enamored about the possibilities that it can bring to really 10x my business and increase my cash flow, because this show, we're all about bigger cash flow, right? And I was picking their brain, and they actually have a Airbnb like down the street from this duplex, and he was like, it will make a great Airbnb. So I'm actually looking into that right now, but yeah, I'm really excited to learn more about it.
Yeah, no, it's fantastic. Yeah, I can't wait to see you get started on it. And, we may also partner up and do something too in the future, for sure.
Yeah, for sure.
Yeah.
So, we just to recap, we talked a lot about why real estate, and we emphasized control, right? And the many benefits of passive real estate investing, whether it be taxes. And there are ways that you can stay ahead of change and kind of stay in front of the path of gentrification and reap those benefits as well. So it's almost like in real estate, you're not actually bound to that information, like where if you're at a public company, it's illegal. You can't have insider knowledge. But in real estate, you can go to the city websites, and they'll tell you, hey, we're going to start looking at this area and we're going to pour money into it. Or, Amazon is coming and building a warehouse here, or this, Fortune 500 company is coming in here. So if you're staying abreast of the news and paying attention, you might be able to stay in the path of gentrification. So we kind of talked about those benefits. And then we also talked about the different types of real estate investing. So on part 2 of this episode, we're just going to tie this all together, dive a little bit deeper into buy and hold and why it is the ideal investment for everybody looking to get into passive real estate. So before we wrap up, Joe, kind of any words of wisdom that you'd like to share with our listeners? Not to put you on the spot.
Yeah, no, I think real estate has been so good to me the last 5 years.
Yeah.
With all the kind of ups and downs, at the end of the day, all the ups and the positives, they add up tremendously.
Oh, yeah.
You add all the upside plus time, and over time, real estate is a tremendous wealth builder. And so I've definitely seen that over the last 5 years. So I'm really excited. And 5 years go by like in a blink of an eye. It's so fast. And so I think that's a huge part of why I'm so excited about real estate too, is that time aspect, just 10x's or multiplies or exponentially increases as you go along.
Yeah. That's awesome. Okay. So that wraps up our show for this week. If you thought that was helpful, please do us a favor and leave us a review on iTunes, Stitcher, or wherever you may be listening. We appreciate your support and see you next time. Thanks, everyone. Thank you for listening to the Bigger Cash Flow podcast. Please remember that opinions of the guests are their own, and nothing on this show should be considered personal or professional advice. Please consult your tax, legal, or financial advisor for personal advice that fit your unique situation. See you next time.